This week, we have two very interesting webinars for you, which is definitely keeping up with the beat of the current market scenario. At 10 a.m., we have a webinar that will discuss how gold has been rallying over the past month or so. Please register using the link in the description. At 11 a.m., we have a webinar that will discuss time-tested strategies for investing, helping you invest confidently in any kind of market. Use the link in the description below to register. We hope you can make it to the one that interests you the most. See you all there.
Paying fees to Mr. Market. We live in an era where the word fees is probably the most hated word in the world of investing. A lot of people think that there is no basis for fees to be charged. Questioning the basis of remuneration itself is again a manifestation of rather extreme behavior. For anything that is being done, we have to always have the attitude to weigh the costs against the benefits. But when it comes to investing in the capital markets, when it comes to evaluating fees, we tend to be very one-sided in only weighing the costs. For a moment, let's accept that that's the right way. You're going to a platform and you're going to invest in the platform. The platform says they don't charge any fees to you, but effectively, they do charge a lot of fees indirectly in the form of transaction charges. They don't charge you brokerage. Then they charge you depository costs, and a lot of incidental expenditure is incurred by you. Then they alter your behavior to make you trade more, because they don't charge brokerage only for delivery. They charge you brokerage for trading. So they take you into trading from investing. When you move from investing to trading, then your costs spiral actually. Most people don't realize this. Even somebody who says, I'm only a hobby trader, once in a while I just do some options for fun of it, does pay a very heavy price. So, everybody in this market pays fees, just that we don't mentally account it as fees. And then there is another type of fees, which is the title of this video, which is paying fees to Mr. Market. And in this heading, I would include all the fees paid by investors like us, all of us, to Mr. Market in the form of our investment mistakes. When you make a mistake, you lose a lot of money, and that loss is the fee we pay to Mr. Market. We don't know who we are paying to, so I would say that we are paying that fee to Mr. Market. So there are broadly three types of fees that we are paying today. Fees paid to platforms, which is called as anything but brokerage, but it's nothing but proxy brokerage. Fees paid to behavioral changes when an investor becomes a trader, which again indirectly benefits the platforms. And fees paid to Mr. Market, because we make a lot of behavioral mistakes and investment judgmental errors. I would think that one should take a closer look at all the fees, not just the fees that you pay directly and transparently to another set of intermediaries, which you are very self-aware about. You are very aware of that. But the other three types which I said, most people don't calculate or compute. As an investor, I feel I have been better off computing these three types of mistakes more than being very aware of the amount of brokerage that I paid to my stockbrokers or any other intermediary. And frankly, over 35 years, I paid tons of money as brokerage. Tons of money. It's not small at all. And I made no effort to save even a penny in that. And there is a good reason for that. I value the kind of associations that I build with intermediaries. I value the relationships. It's another matter the intermediary may not value it, which is also true. But still, I give a lot of respect to who I work with. I don't go to somebody who is the lowest cost service provider, because every lowest cost service provider is going to recover money from us in some surreptitious way. And many people believe that their cost is lowest because they have technology and all that. Contrary to that, the persons who claim to be the lowest cost producers of services or the lowest cost providers of services make the highest profit out of society. In fact, the worst profiteering comes at the hands of the so-called lowest cost service providers. Many people are very generous in calling this efficiency, but I think it comes due to the kind of behavioral changes that they induce in their customers. It's the fee paid to Mr. Market by the investor. It is not a fee earned by the service provider or the platform. This behavioral degradation is what is directly contributing to those humongous profits. As an investor and as a professional, I feel that an investor must always be away from places where such profiteering is happening, even if the cost is zero. Even if that guy is going to put money in your hand, I mean, assume that he is going to actually give you money for transacting with him, still you will lose money. That is my understanding. And that is why I value relationships. It's very interesting that a lot of moral preaching on investing, on behavior, comes from the very same people who are profiteering in the market today. In fact, they are probably going to be heard far more than voices like mine, because we don't count. They have all the money in the world to make media write about them every day, present them like messiahs to society, the only set of do-gooders in the capital market ecosystem, and probably everybody would believe it, top down to the retail investor. Well, we can't help it. That's the kind of society that we have to live and work in. But we still have to flag these things. And why do we flag this? We flag this for the benefit of those who are willing to think again as to what is happening to them. Because the fees that you're going to pay to Mr. Market are going to stop you from achieving the financial outcomes that you should otherwise achieve in your life. So, you should not be making behavioral mistakes, you should not be making investment mistakes, and you should not migrate from the path of being an investor to being a crazy trader. If these three things don't happen, you have a better chance of becoming a successful investor who actually earns from the market instead of paying fees to it. Today, for the crores of people who came into the market post-COVID, I think this is the most important thing. You should stop paying fees to Mr. Market and start creating wealth for yourself. Thank you for watching this video.